What is going on, guys? Good morning. Good morning. It's your favorite mortgage lender, Abdel Kawatmi, got mortgages coming to us live from Tulum, Mexico. We're here for our president's cabinet with our company. I'm going to go over really quickly what happened last week. It's been already a jam-packed 2 days in terms of data, with over the weekend, President Trump and China agreeing to essentially a 90-day hold, cutting down tariffs from upwards of almost 145%, dropping it now by almost 115% to 30%. We'll get into that. But last week we had a lot going on when we talked about what the Fed was doing, really what was going to be kind of their consensus in regards to the market. What were they going to expect to see in terms of some really deep impact in regards to their tone? And we'll see once again that they decided to hold on cutting interest rates, right? So it was another pause. They're in what's called a wait and see approach, right? A lot of uncertainty, obviously, with tariffs. We got updates this morning actually on CPI, Consumer Price Index. Obviously started seeing some changes slowly. Obviously, businesses have been getting hit with tariffs based on the reports. Shelters lagging, right? But we did see obviously a little bit of slowdown, actually 2.3% instead of 2.4%. Now, housing markets, again, nationwide, we're starting to see prices increase, which again is typical around this time with the spring and summer. Now, once again, going back to the Fed, we decided to see that wait and see approach. Federal Reserve decided to maintain their benchmark interest rate at 4.25%, really basically since they paused starting at the end of last year, I should say. A lot of it just comes down to just the risks between inflation and employment and kind of waiting to see. Remember, the federal funds rate is not directly correlated with interest rates. It affects the overnight borrowing rates for banks, but does potentially have a little bit of undue influence in regards to that. Okay. So again, the Fed is remaining to stay focused on their dual mandate of, price stability, maximum employment. So price of stuff and obviously the employment market. Of course, the goals can sometimes be stretched in either direction, but really the new tariffs is going to create, I think, economic uncertainty. Right, we saw the stock market take a huge dip about a month and change ago, right? And obviously now the stock market has pretty much reversed all that course. I think I heard there almost $2 trillion plus was actually made yesterday with the announcement of obviously the pause on tariffs and stuff. So Jerome Powell said wait 20 times the last session, right? Homeownership, again, we saw CoreLogic, which is now Cotality, showed again an increase of home prices, 2.5% on an annual growth perspective. Of course, remember, it varies per individual local market, but still from a national level to see that much home appreciation, even with the massive gains that we've seen, once again, continues to reiterate how powerful real estate is, right? Unemployment. So we're seeing continuing jobless claims, 1.87, right? Still the highest since November of 2021 from last week. And then we're seeing, obviously, again, continuing jobless claims. Although it's low, it's still concerning when we're seeing a lot of the continuing claims, right, obviously continue to still remain high, right? Now, with that being said, I want to kind of talk about the last couple of days, right? What happened on over the weekend, right? So we do know that April numbers for CPI just came in. It's the slowest price growth since April of 2021, which is huge. Now, this is a good thing, but we shouldn't get our hopes up just yet, right? People are still feeling the heat, right? Eggs, beef, milk, gas is obviously cheaper, but food is still relatively high, right? Here's the biggest thing for us to keep in mind too: tariffs, right? We obviously always hear them. We just finished talking about them. We know that the tariffs are still basically squeezing businesses. There's been a new deal again, dropping it to 30%, but it's still relatively, the tariff burden is the highest it's been since 1934, right? Now, when we talk about obviously rent and shelter costs, housing obviously is what really puts a big push on inflation. Rent's up 4%, same level we saw in COVID. Shelter, of course, as I said, until it really cools down, will really inflation not really get anywhere. But recapping, the bottom line is prices are slower. They're still high, but again, they're slower. And tariffs are going to continue really kind of throwing a little bit of uncertainty into the market and the economy until we really see what the Fed is going to do when we start monitoring some of those slower growths and some of those expectations, right, for us to see. Now, again, we really want to kind of identify as inflation continues to slow down, what is going to be the impact with the U.S. and China obviously pause, right? With them agreeing to reduce, a big part we saw is I think it was last month, not one cargo ship essentially left China, right? So first time it's happened since COVID. How can that potentially impact the market? What are some of the things that we want to really see in regards to rates and bonds? A lot of jam-packed stuff. We'll see how wholesale inflation comes in, because that I think is going to be a key point simultaneously as to how inflation is affecting the overall cost of stuff. So, of course, I'll keep you guys updated. If you guys have any questions, make sure you guys visit our website, gotmortgages.com. I'll catch you guys next time. Hopefully, we'll get some proper news as we continue taking it from there. Talk to you guys soon.